Hallo und herzlich willkommen. Hier lernst du alles rund um das Thema Investor Relations, Fundraising und Kapitalmarkt. Mein Name ist Julia Stötzl und ich bin Gründerin und CEO von Investor Relations Beratung Unicorn. Unicorn ist davon eine Mission, Investor Relations für die nächste Generation einzuführen. Das bedeutet ganz konkret die Integration von digitalen Medien wie zum Beispiel LinkedIn, Podcast, Newsletter in die klassische Kapitalmarktarbeit. Mehr Informationen zu Unicorn, aber auch zum Podcast findest du unter unicornconsulting.com. Und jetzt wünsche ich euch viel Spaß beim Zuhören.
But in the end, I think knowing the business inside and out is very important. And if you feel that you don't know the business inside and out, involve other colleagues. I mean, usually when you put together a business plan, when you put together a pitch deck, if that's something that you're still doing, then getting kind of a proper buy-in from different parties in the business is A, very helpful, and then B, you also kind of get all the input that you could have in order to really be knowledgeable.
So Julia, here we are, first catch-up of our podcast for this year. Quite exciting. And also so weird to have been off for such a long, it feels like a long time. What has been happening with you?
Yeah, really, it has been such a long time. I mean, it was I think 4 weeks, the last interaction we really had at our Street Reads event, right? And then we saw each other last Thursday for this Target Global office warming. What was it? Housewarming. It was quite cozy, I guess. Yeah, what happened? So let me think. There's so many things happened, but I would say the three main things is that, as you know, we are hosting, or we're kind of a media partner now for the Montega Hamburger Investorentage, the HIT conference, which is a conference for listed companies. So we're there with our podcast again and interviewing people, mainly German CEOs and CFOs of listed companies. So that's going to be super exciting. That kind of Street Reads is moving forward, also being really present at physical events. I think this is a super exciting development. Also adding kind of the German interview kind of setup, right? Because so we have our English interviews and also German interviews. And yeah, that's it on the Street Reads front. And then on the Unicorn front, I have finally received the keys from my office. It all took a bit longer than expected, as usual. I mean, this is not my first rodeo with offices and houses, but it always takes a bit longer. But it's nice. It's just a lot of work. Really, it really takes me. I kind of underestimated how much it takes me out operationally. Because internet is not working. And then you have to get the telecom guys 3 times, and it's just a lot.
It's like a flat, but times 2.
Yes, because you also have to you have to set certain insurances, and this is actually something that I will announce once it's final, but it's.
I can't wait.
I will also interior design that. Yeah, it's gonna be. You already know what it is, but cannot talk about it yet. So that thing I also had to arrange for the office, right? So there's a lot of now also interior going on and furnishing. I got the kitchen today. Yeah, and then in April there will be the office warming as well. So that's on the Unicorn front, alongside obviously the day-to-day business. And then personally, as you know, I'm getting married in the summer, and I kind of neglected my health for probably 10 years. And I was okay, 2024 is my year. I will now take a personal trainer, and this is my commitment. This is my pledge to myself. Twice a week, personal trainer. I did it yesterday for the first time, and I'm dying today already. My muscles are aching like crazy. So that's up with me.
This is so cool. I'm sure you're going to start seeing the results very soon, and you're going to be super happy. Also, it's a really good rhythm.
Twice a week. More I don't think I can commit to, especially when we're traveling and stuff, right? And also it's quite expensive, to be honest. It's an investment in yourself, But I'll tell you. I'll report back.
You do before and after feedback.
Exactly. How are you? We have not. Well, we saw each other on Thursday, but what else? Tell me a bit about yourself and how the last few weeks were.
Well, I think you got a bit of a rundown. So yeah, actually, me and Julia met on Thursday. It was a really nice way to get back to Berlin. So I was not in Berlin until this week. I was back in Italy, so it was a nice way to start the year. Very slow and relaxed, just working from there and everything. And then getting back to Berlin, going to Target Global, was having their office warming. Hard to say. And it was nice to see the kind of VC and the Berlin ecosystem scene again. We also bumped into a few familiar faces, met also some new people that would like to join as guests on the podcast. I think that was very exciting.
Yeah, that was really cool. We got some really nice people lined up actually for the podcast now.
I mean, you will get, for the audience, they'll get to find out as we release or we get them on the episode. So cross finger that they actually come in and join us. But yes, so very interesting and exciting way to kick off the year. From my personal work side, I'm working on also all the year plans for the teams. And it's something that I actually learned by working with you, Julia. You would often do this with the milestone plans, what are the key outputs, etc., etc. So actually
Nice.
doing it
I'm glad
myself.
it's still like
You always learn.
I'm not really into my own business anymore. I don't know. I kind of failed to continue, but it's good that you do that.
But honestly, like, gives quite a bit of clarity both to the teams, but also to myself. I know what we're aiming to achieve, and I'm trying to plan the first my first team offsite for my teams. Very, yeah. It would be like kind of team, like a goal setting, like kind of agreeing on all these like plans and like responsibilities for the year. And then your favorite topic, ESG.
I don't mind it.
Yeah, no, I have to stop mocking you on this. No, but yeah, people are starting to get worried about about the new regulations. So we have to formalize the plan and also how my own team is going to tackle our own deliverables. So that would be the second half of the offsite would be dedicated to that. So I'll let you know when it happens.
Very cool. I think it's very important. That's also what I realized is like you need to get the team on board. They agree to the goals, like they're committed to it, you know. It's very different to as opposed to like you're just saying, okay, we're gonna do this and this and this, and no one has like a buy-in. So that's really cool. I should do that as well. Like I don't have any OKRs or any milestones, and yeah, it's just a lot, as you know, like the day-to-day business.
Yeah. But actually, I mean, stepping out and doing this is honestly challenging. Like it took me quite a bit of extra effort
Usually in your
to
free time, right? I mean, I did it like sometimes at nights, on the weekends. It's like not possible to do it.
basically, yes. When I mean, if the operational work takes all your day, then this is like comes on top of it. And
Yeah. On that note, I would say let's go into the deep dive, right?
yeah, let's go for it.
So, hello everyone, and welcome to another episode of Street Reads. We have already interviewed a couple of late-stage private companies, including a couple of unicorns, and today we are super excited to have yet another CFO and founder, in fact, of a exciting company here with us, which is McMakler. So we have Benedict Manigold with us, CFO of McMakler. Benedict, do you want to introduce yourself a little bit to our audience and how you got to become a CFO of such a company?
Yeah, sure. First of all, thanks a lot for having me. Quick correction. I mean, I'm flattered, but I'm not one of the founders of the company. But I've joined about 2.5 years in, more or less. So I still got a lot of the early stage spirit, but unfortunately wasn't one of the members in the first couple of hours. So, but that also means that I actually had to come to Berlin and meet the entire team in order to become the CFO. Which was pretty fun though. One of the reasons why I was instantly quite happy to commit and join the company once we got aligned. My background is not in real estate at all. So I basically, at that time, I was in London. I was finishing up my MBA at INSEAD, and at the same time, I was working at Alderton, so at a VC in London over the summertime, and was actually quite happy to be back in London. I was in London before because I studied there, and then worked at JP Morgan there for a couple of years in the TMT team. But had stayed in Berlin for a while in between, and so I knew what I was getting myself into, and that was also not too bad of a prospect. So, but to go back to the initial question, so I now already gave a couple of things away, but I think what kind of was an appealing mixture for me was I had a background in investment banking, so I already mentioned I was at JP Morgan in the TMT team, so especially towards the end of the years, I was there for 3 in total. Tech became a bit more prevalent across Europe in terms of kind of the business overall. I was then working with companies such as Rocket Internet or Zalando and kind of working on their respective IPOs in my last year. So both Berlin and sort of the old tech ecosystem then grew on me. And I then joined 3 partners in co-founding a Bitcoin wallet. It was first supposed to be a payment processor. 3 of them, or 2 of the 3, came back from China in 2013, quite excited about the kind of everything that was happening around crypto. And obviously also then it was mixed news, and it was more of a Wild West situation than it is today, even more Wild West than today. But we were quite excited to try to build something, and I had some experience with payment companies, etc., during my banking days. So overall, it kind of made sense. But after 3 years, basically, I then was the CFO as we built the company up. And after about 3 years, we noticed it became more and more of an exchange platform, meaning for me, the role was a lot of, other than kind of general finances and funding management and business planning, etc., the role was also quite heavy on AML, KYC, just general kind of hedging purpose, etc., which is fun for a while, but not really my strong suit in a way. And so I then hired a new CFO and left to do an MBA, which was kind of a plan anyway at some point, but I never knew when. And then the rest I already kind of explained. And I have to say that while, again, as I'm not from the kind of real estate industry, in the beginning I was a bit, let's say, I wasn't reluctant, but I was thinking, okay, let's listen to this, let's hear about this. But it could fit quite well because I had a couple of the kind of pedigrees that could work well for a young company's CFO role. And but then obviously once I met the team here and kind of understood how they thought about real estate, how they thought kind of about real estate brokerage, and how that market, especially in the residential space and especially outside of very pricey regions, could change for the better, that actually became a super interesting case super quickly. And I mean, I was happy that they then decided that they want to work with me, and that's almost 6 years ago now. So it's a good ride.
Wow, interesting. Yeah, I found McMakler a very interesting company because I had my fair share of real estate experiences as well. I mean, in Berlin, when interest was still low, you were almost stupid not to buy an apartment. Luckily, I did. But yeah, I mean, the industry is still very much I feel analog, right? There's a lot of still manual tasks, maklers having just these relationships, it's almost strange that such a big market is not really fully digitalized yet. And I feel I sometimes actually as a customer also came across you and it felt much more digital. So I think there's a huge, obviously, opportunity to kind of put technology in this together. And I think it's a super interesting case.
Yeah, it's a mixture, right? I mean, in the end, we would love to be even more digital than we are right now in our work with clients and customers. But obviously, especially because it is such a huge transaction, and for many of the sellers, it's maybe them kind of securing the liquidity for the retirement, etc. It's a very emotional thing, even if you don't care about the property itself, but you obviously care about your finances. So at least in most cases, and that makes this a much more, as you said, analog sort of experience, because people want to have someone around that kind of holds the hand a little throughout the process. And we've noticed that quite early on. So we never really tried to build a digital-only agent trying to do it all digitally, but we always mixed digital processes and sort of digital features and data mining, etc., with kind of the real life footprint, so that you can have agents that can focus on the customers, etc., and be there for them in that sort of usually at least very exciting period of their life.
Yeah, super interesting. And apparently it's going well, not only kind of from a business model perspective, but also from a funding perspective. So we noted, congrats on that. I know the funding round is already a little bit in the past, but your recent funding round was very successful. And especially in this current market backdrop, I think a lot of companies are, struggling to do fundraising. So maybe you do have some tips on processes that you did that made you so successful in the fundraising process for any sort of CFOs or companies founders that are currently in the stage and need potentially funding?
Yeah, obviously very glad to. I mean, I would think that the recent fundraise probably wasn't our most successful one, to be fair. I mean, having done it at all in the current market was fantastic. And I think it's a very strong show of support of our existing investors. And we also talked to a lot of external investors who maintain their kind of interest in the business despite the, let's say, dynamic real estate market for the past 18 months or so. But obviously, in the past years, we've done multiple financing rounds. And I think that while most of the I mean, I think that for every business and every industry, fundraising is a little different, especially depending whether you're sort of in a very hot market, in a very hot space where you have a lot more sort of, let's say, where it's a lot more about vision than around KPI. Obviously, also depending a lot on which stage the business is in and how much meat there already is around the bone that investors can actually kind of sink their teeth in. But if you kind of think about fundraising overall and how we, as the business that we are, can approach it, I think one thing that's always a good start is to know your business really well. So I think CFO roles can be super different, right? And also, it's not always the CFO running the fundraising. A lot of times, like, the investors want to be mostly speaking to the founders, the CEO, kind of the person really in the driver's seat. In other companies, especially more established ones, you can have the entire process run by a CFO, and that's kind of a very different sort of setup. But in the end, I think knowing the business inside and out is very important. And if you feel that you don't know the business inside and out, involve other colleagues. I mean, usually when you put together a business plan, when you put together a pitch deck, if that's something that you're still doing, then getting kind of a proper buy-in from different parties in the business is very helpful, because they also need to align with what you're promising investors, because they need to be the one executing, right? And then B, you also kind of get all the input that you could have in order to really be knowledgeable. And then you really understand, what are you selling, what's the vision, what's the product, what's your solution, why are you actually here, what's the problem you're solving, and what's your sort of your claim to fame. And I think that's something that most good investors focus most about, right? So the business is obviously at the core, and yes, I suppose when you manage the fundraise, it's up to you to be the storyteller and kind of sell the what you can sell. But in the end, it's obviously the work of kind of the entire company that gives you anything to sell in the first place. So know the business inside and out. Don't bullshit around, to be frank, and also don't overpromise. Right? I mean, usually if you go around kind of thinking, what does this certain investor want to hear, and what can I tell him so that they feel more inclined to invest, is usually something that doesn't work really well in the long term, or even in the short term. Usually they can smell that something is a bit off. So that's kind of the business side of things. And on the investor side, I think there's a couple of relatively maybe straightforward points, but that are probably the most important ones. So I'd say know who, or like figure out what investor could be a good fit, rather than kind of do a spray and pray approach and kind of talk to everyone. There are investors that focus on specific industries, specific stages, that kind of fit your growth versus profitability profile, that maybe like a certain operational side of the business. If you are a complete, like, let's say McMakler is, despite being a tech business, is relatively operational. I think everyone would agree with that. If I would now engage only with businesses who are self-proclaimed SaaS investors, they will probably not be very interested in this stage of the business. So kind of understand the investors and kind of approach them with a clear sort of angle. Then the other one then, which kind of goes in the same direction, is build your own sort of network. I mean, you can always rely on some introductions, but I feel that the warmer those introductions are, so the better you kind of work your network, the easier it is to get to a point where you can have full, like, meaningful conversations around the business, and not trying to put like an elevator pitch together, which is usually quite hard to work. And do that early. So I think what has worked really well for us with a number of the kind of, especially the lead investors in the last couple of rounds, was to have a dialogue. So we didn't, both of these investors, for example, for our Series D and C, we didn't pick them up during the raise. We basically already had a conversation. So they were able to follow the business, follow the financial planning, understand what it is that we're looking at, how that changes over time, how we deal with maybe slight pivots, how we deal with problems in the market, how we deal with opportunities in the market. So they can really understand where you're coming from, what you're trying to do, and they don't have to trust what you tell them in a couple of meetings, but they can actually see how you move along doing it. So when you then start raising, you can basically just pick up where you left off and say, look, now would actually be a good time to raise, if they're not the ones to tell you in the first place. That also sometimes happens when they're close enough to the business. And then you can have a very informed, transparent kind of conversation with less window dressing and less sort of process management. So that's usually quite a nice thing to do. So in the end, as I mentioned, like, it is definitely mostly about the business, but running kind of trust-based or at least a transparent process is usually a good idea if you want to get something across the line. And then I suppose if you do have a competitive process and you have multiple investors, etc., interested, I think the most important point is to keep momentum. So what you want to try to do, at least to a certain degree, and sometimes that's difficult, especially when it's over summer or something, try to have a relatively aligned timeline with the different investors engaged. So if you do make it to the term sheet stage, what you don't want to have is that you have to drop out with a couple, like that you have to leave behind a couple of conversations because one term sheet will expire, so you have to make a decision before you actually get any input from some of them. So there's a bit of element of timing as well that can be quite important. And I think that's something, again, where transparency wins, and without you seeming to put too much pressure on things, being too much of a salesman. I think if you're being open about kind of there are multiple parties and we're kind of in this stage of the process, usually is a good idea.
No, I absolutely agree. I also agree on the fact that sometimes you have investors that are, you speak to during the fundraiser. Also, like I've done a couple of IPOs. So if speaking to them, and maybe they're not investing at the time, but maybe they will invest later. So sometimes a no is not a no forever, but it's like just a not now. And if you keep them in a loop, tell them how you're doing, how the business is developing, building that trust over time as part of your network, I think that really goes a long way. And, to keep them in a loop. I don't know if you, for example, do have like a subscription list or something, or like an investor list that you send updates to as well, even for those that are not invested. Maybe that could be also.
Yeah, no, I mean, it's a bit more individual than that, but no, I do keep a dialogue with a lot of investors, and even past investors, or I mean, there's lots of things you can talk about, even if it isn't your current business. They might be asking for referrals, they might be asking for certain business you might see in a certain industry. I think usually it's a good idea to just stay in touch. And what you said is absolutely right. Like, it's very hard sometimes to understand what investor comes in at what stage, because early stage or Series A, Series B, these things sort of also move around over time in terms of sizing, in terms of staging. But I mean, a Series A 2 years ago is a lot more senior than a Series A 10 years ago, right? Where now you do like a venture, pre-seed, seed, etc. So I think it's not always easy to understand that. So if you're not exactly right in the first kind of approach, definitely kind of keep in touch if it's worth the time, and kind of stay in the loop.
Absolutely. We already touched upon briefly what you said was kind of convincing investors in the end. You mentioned the business model over and over again, kind of that this is kind of the foundation of everything. But was there anything else that you would say are key aspects that convinced investors, or maybe also what were key challenges in the recent fundraise? And also in that light, how important would you rate existing investors as almost like an accelerator, or as like a catalyst to get you maybe introductions, to kind of vouch for you? Maybe you can talk a little bit about that as well.
So I think that, I mean, obviously a major challenge for us over the operationally and from a fundraising perspective, or generally kind of from a business planning and, let's say, liquidity management perspective, is the market dynamics of the past 18 months, right? So we've had a massive shift in the real estate market. I think between inflation and interest rates and energy crisis and macroeconomic sort of, let's say, uncertainties, exactly. There are many industries that are touched by this, right? Like, it's almost, I would say that there's almost no industry that's not in some aspect sort of affected by these dynamics. But real estate is basically kind of the eye of the storm of this, right? Because you have, at the same time, you have sort of elevated price levels in the market from the years before, where money was basically free. I mean, almost, right? Let's say renting was never more like cheaper than buying in the past couple of years. So that's unnatural, right? That isn't, especially if you have no equity. That shouldn't be the case in a sort of overall trajectory, right? But that was the case. So price levels were elevated. At the same time, now the purchasing power of buyers decreased rapidly because of the interest rates. So if you think about what property can I afford, that's a very different picture now than it was 2 years ago. So in Germany, I know we went from around 0.9 average interest in around February, March 22 to around 3.7% in Q4 22. So it's like quadrupled. So if you think I can spend around, let's say I can afford 800 euros a month to pay, like to kind of do financing and a bit of repayment, that now doesn't get you much anymore at 4%. And that's a kind of market reality that many had to face. So there was a big gap between sellers and buyers. And then at the same time, you had the issue that there wasn't a kind of constant supply of new properties into the market. So rent would now become more expensive as less people were looking to buy, but also there were no new rental properties kind of entering the market because most of the developers, for them, it's not a feasible economic model to keep building if building costs are very high, and at the same time, interest rates are very high. So that's that works very unwell.
And especially in Berlin, if you also have a rental cap.
Yeah, and I mean, you've seen over the past couple of weeks and months, you've seen lots of developers really struggling with that, being kind of in that tight place. And at the same time, it's not going to, if you own a property and you face costs, and let's just think about kind of like all the renovations necessary in terms of kind of the energy necessity, kind of energy regulations over the next 10 years. Around half the properties in Germany will need renovations. And some of that will be paid for by the tenants, because you can put some of that into kind of increased rent, which is not great for tenants. And some of that will be handled by the property holders, who in some cases have already kind of made big gains financially over the past 10, 15, 20 years. Then that's fine. But they may have also bought the property 2 years ago or 3 years ago. And then you won't have those financial gains in the background to kind of make up for a tough couple of years that are coming up. So I've digressed a little bit. I went a bit off topic, but understanding that the market is very, very difficult right now, and probably the most difficult it's been for a couple of decades, just kind of goes to show how that obviously impacts the way that we do business, and obviously impacts the way that we can fundraise. So almost all major investors, especially the larger ones, the later stage ones, maybe some over funds that also have public market investments and have a more diversified portfolio strategy, they usually are exposed to real estate in some form. And even if it is just their own fundraising, because pension funds, etc., now have a different sort of risk appetite. So most investors have an exposure to real estate, meaning if the market is in a really bad place, the last thing they want to do is put more money into the market. And some investors actually say, look, let's wait until the market picks up. We know that the valuation will be higher then, but we'll be happy to pay a higher valuation as long as the risk is a bit lower than now. So that's kind of the story of about a year ago, when there was so much uncertainty in the market. Now, you do have some trends, some underlying trends there is at least a bit more stability by now. So in terms of the real estate market overall, you do see that some of the sort of uncertainty is receding, that you have a bit more kind of, let's say, long-term view on vision, on strategy again, rather than kind of short-term firefighting. And that's something obviously that investors like to see. So for us, the major challenge has definitely been kind of convincing investors, showing investors that we're obviously in a tough market, but that we are in a very good position in that market. So things to show were how you fare versus the market, right? Market share gains. What's your sort of profitability on a unit economic level versus your market competition? Are you in a better or worse place? And how is that going to be over the next couple of years? Is it going to be sustainable? Could you actually have a trajectory that's outgrowing others? And I think that's something that was very important in terms of the strategy. But at the same time, it's all about profitability in a reasonable time frame. So the whole growth above all else, that sort of period of time, I think, has passed. That's the same for most of the later stage ventures now.
Are you profitable now? If you have,
we're not, but we are very close to being profitable. So, and I think then we're obviously then diving into a new topic, but obviously you must have seen that we also had to take a couple of very tough measures over the past 18 months, especially when it comes to personnel. So that all of that is with a very clear goal in mind, and that's profitability. So we have to make sure that even if the market doesn't pick up, that we can reach profitability within a time frame that works for us to get to the independence that we want to have. So in order to keep scaling up, in order to keep investing in new products and kind of new technology, etc., we need to make sure that the core business shows the profitability that we want to have. And while you can always wait for the market to improve in order to reach profitability, it's probably a bit safer, or let's say a bit more conservative, to take matters into your own hand. And I think that's something that investors definitely need to see, and that's both existing, so you're basically your shareholders and potential new shareholders. They want to see that the business is capable in its current form to to get to profitability, to sustain profitability, and then to keep growing and keep going after the vision, after the kind of strategic rationale that you set out, while maintaining a certain level of profitability. So, and that is a shift, and that's something that we had to show quite frequently as the market changed. So naturally, it would have been beautiful looking back at the kind of measures over the past couple of months. It would have been beautiful, or years, it would have been very nice to have one bad decision to make and then be done with it and keep growing, and or at least maintain a certain level of visibility. But when the market around you is very dynamic, that's tough to do. And in the end, as a brokerage, we have a very big portion of sales force, right? As in brokers that run active processes that make sure that we can generate revenue. So as the market is somewhat dynamic, you can't just go and, let's say, make drastic cuts, because you will lose out on revenue that is important to the business. So
it's always that discussion. I mean, I in my life, whenever I did investor relations, I only worked for non-profitable companies by default. I mean, Deliver Hero and About You, I think to this day, I'm not sure. Don't nail me down on this one, but at least Deliver Hero is still unprofitable, I think. And it's tough. I mean, these days, 2 years ago, 3 years ago, this was like very normal. Even companies IPO that were not profitable.
Yeah, 100%.
I think in today's environment, that's not really possible anymore. And really all companies I speak to, if they're not profitable, they really try to get profitability. It just takes a lot of pressure off. It attracts more investors as well, that are only looking for profitable companies. And you're really punished or penalized a lot, if you're not there yet, especially then, when it gets more and more later stage. And yeah.
No, definitely. I think having a clear view on profitability is probably the most important part. So mostly, at least, and that's true both for equity and debt capital investors, the majority, they want to have a very sort of clear path to profitability in a relatively short time frame. So you don't necessarily, even for an IPO, I think that's true. You don't necessarily need to be there yet. You don't necessarily need to be profitable at the time. But if you're not, then it needs to be very clear that you can get there. And that can be obviously due to kind of growing top line, that's the good part, or due to kind of cost reductions across the board, depending on what you need to be doing. That's the more painful part, but sometimes also a necessary part when you kind of grow up a little as a startup. I mean, obviously,
the company needs to make money, right, at the end of the day. So
that's it, yeah.
That's the whole purpose, hopefully.
Yeah.
Cool. Well, I see that you are obviously already quite advanced in your fundraising. I checked out just now, as also one of your investors is Belly Gifford, so that I would consider that a quite like mature late stage crossover investor as well. So the question begs, as I'm coming from the investor relations space and our audience is also quite into the IR space, if you already have someone at the moment that is supporting you on these kind of investor roles. I know some of the late stage companies that I talk to, some of them actually already have a dedicated role, some of them don't. How do you look at this, a role or a department that's specifically supporting you in those sort of tasks?
Yeah, that's a good question. I mean, in the end, so far we haven't tapped into that. So, but generally our funding rounds in the past have been relatively slim, as in we've always managed it kind of internally. It was always a very small group. So it's a tight-knit sort of team, which makes some of the parts much easier, because it's very easy to work together very closely. You don't have in the back of your head that you might be spending money on advisory that you then may or may not need. So it always depends, I think, it depends on the approach and the investors you're talking to. So Bailey Gifford, for example, that you mentioned, we had a very good conversation from day one, right? So even before we were fundraising, we already started just having a conversation. So that became a very, let's say, transparent, but also very friendly relationship from the get-go. So it wasn't a thing that needed much kind of investor relation kind of interaction, let's call it that. So it was just authentic, it was honest, it was like transparent and quite detail-oriented. So, and as soon as you get to, in my view at least, as soon as you get to a certain level of detail, and that by that I mean quite a lot of detail, it becomes harder to have a dedicated IR role taking care of those conversations. So because at some point they become so, let's say, specific that you need to be speaking to the key management guys who actually have a view on those topics that may or may not have been discussed before. And but that being said, I think still there's a big value of having either an internal or external kind of IR role, especially when it comes to timely information towards your existing shareholders. Because what happens is when you're in a funding round, for example, for me as a CFO, that is probably the prime occupation I have at that time, right? So that's my most important project at that time, meaning if there's a question coming up, if there's conversations, if there's information requests or something, I will take care of those as soon as I can. So, and I don't want to say that your existing shareholders are less important, but I mean, if you're neck deep in operational tasks, if you're neck deep in a funding round maybe, and existing shareholders have a question, an audit request, something like that, those are things that then can be a bit difficult to deliver on time, just because it isn't the most important thing at the time. If you have someone internally or externally that kind of supports you with these tasks, you can make sure that everyone gets the information they need as they deserve to get it, and not be kind of held off because things are so busy. So in my opinion, as a support function, I think it's vital at a certain stage, especially if your investors demand, if you have more kind of larger scale investors who just also have their own timelines, and as your reporting also becomes a bit more cumbersome. So as soon as you have to have quarterly, let's say audited quarterly accounts on a group level, consolidated, as soon as you have to have more sort of audit trails, compliance and governance related topics, shareholder resolutions, board resolutions, all that kind of stuff. There's a lot of stuff to handle, and I think having a specific role to tackle those sort of conversations and help out with the admin is very important.
Yeah, absolutely. Also keep your how do you say it? To keep your back free. I think that's a German saying. I just translated.
No, but that's what I mean exactly. I mean, it's just so that because there's a limit of how much a certain person can take on. And the sooner you sort of diversify, the sooner you have multiple people with their sort of specific roles, the better, right?
Yeah.
And it's I think building a team before you need it is usually a cheaper option than then kind of needing something very, very quickly and being in a super rush.
So I will ask you one last question because we are already quite advanced in timing and I'm conscious of your time as well. So as you have raised now the capital, what are your plans for 2024? What is your outlook maybe for the real estate market? What are you going to do with the money that you raised already? But what's on the horizon for McMakler?
So I think I've already talked quite a bit about the market. I mean, no one has a crystal ball, right? But it feels like things are stabilizing. It feels like the kind of overall information kind of in the market is a bit more settled now. So I think people can make more informed decisions, etc. For us, the money that we've raised, and it wasn't, I mean, we're not talking about a huge amount of money, right? But the money that we've raised is really to just cement the plans that we already had in place before. So this wasn't a sort of raise where we said, if we raise these funds, we can do certain projects. It was more to maintain our vision, to kind of keep kind of on a certain strategic rationale, etc. We will have to have a bit of a kind of safety net, a parachute. And I mean, given that point, I mean, and that goes to show that I think a little bit, I mean, it hasn't been 2 weeks yet since we had to let go of a couple of colleagues that we would have loved to keep on. And those decisions are very tough, and they also put a lot of strain on the business. And it just kind of shows that we are very careful with the funds that we have raised, because this is the kind of the capital that does get us to profitability, obviously with a buffer, but it's kind of our responsibility in managing the business that we do make sure that there's no kind of, let's say, that we don't get to a bottleneck. And so what are the things that we're working on? I mean, it's kind of along the same lines as what we've done in the past, but we're becoming more customer-centric in a way. I think the data that we've gathered, and by now we probably, in terms of valuation, but also in terms of just general property data, we probably have already the deepest data set on kind of general properties in the German market. I think because there aren't that many centralized agencies and classifieds just lack the depth of actually done transactions, etc. We now have a lot of data to go with. So for us, it's really about building products that utilize all the data to really inform customers. So if I think about what's most important in being a brokerage, I think a key element here is to think about that it is more difficult now to sell and buy real estate than it was 2 years ago. So, I mean, you told me that you did buy, so you were one of the lucky ones that actually got access, right? So 2 years ago, maybe the financing wasn't so hard, but then actually getting the property you wanted while there were 100 other people wanting it, also not so easy.
But I'm a hustler. I hustle my way through Berlin.
Okay. But no, the point is that now selling a property is not as easy as it used to be. And buying a property is a bit more scary than it used to be, maybe. So both of those things actually mandate a stronger case for engaging with a real estate expert that can actually help you out. But in order for that to make it to be worth it, that expert has to actually be an expert and not someone who just tells you whatever you need to hear. And that means us utilizing the data, building some digital products around it that make that data much more accessible is a very, very strong focus. At the same time, the way that we combine our mortgage brokerage with the core business is a big element. So since we have access to data points, etc., we can offer a much faster service around getting a mortgage, getting the financing in place than other players. Right? So for someone to buy a property through McMakler and getting their financing out of the same hands makes a lot of sense. And especially when the market is very dynamic and interest shops around, etc., it's quite important to get to a certain level of certainty. And that's something we've been working on already for a while, but we're now getting to a point where it's such a seamless transaction that it feels much more natural. And that's the thing it should be. I mean, if you go out and buy a new car, let's say you go to VW, can I name brands? I'm not sure. Let's say you go to a car dealership and you want to take out a car, you want to buy a car. You want to buy a car. And you want to get a financing for that, right? Not leasing, but you want to get it financed. You usually don't call 15 banks and ask them about what they offer, right? Usually you just sign the financing with whatever they use. Same if you buy a TV at a big shop and you get it financed, usually you sign a financing at that shop, because why wouldn't you? Why is that so different with buying a property? Why would you not go through someone who knows the most about the property already? Because it's much easier for you. And that's a certain kind of element that in the past has been overcomplicated in my view. Obviously, it is a more, like financially, it is a more, let's say, complex and definitely much more voluminous item than a car or a TV. But in the end, getting everything out of one hand is a big element. So kind of combining those things in a way, digitally, product-based, that customers can engage with easily and transparently is a big element of what we're doing in 2024. And I think that will also then help us to further the kind of service mentality of the agents that work for us.
Yeah. Yeah, and I really think it's also like this flywheel that will then keep customers with you, right? You have the customer data, you know, that you already have their, I don't know, income situation. If they want to buy a second property, you know, then it's much more easy to use. And I really see benefit in that. And I mean, I, as a customer, I already used you, so I can confirm it's good.
That's a disclaimer. You should have said so in the beginning. No, but I have to say, actually you did. I have to say that I'm 100% with you. But I think one of the most important parts is that there's still too much noise or there's still too much non-information in the market, still too much intransparency in the market. There's a lot of brokers around who, I'm not saying they're not trying their best, I'm just saying that they don't have access to all the information they would need to actually perform a service to the customers that has a huge impact. So if the information that you have at your hand to help your current client is having done 10 transactions over the past 3 years, 2 of which were completely different from this year, then it's very, very difficult to actually make meaningful decisions. If you sell thousands of properties in a year and hundreds of properties in a month, and you can kind of gather data and slice and dice it by what's close or what's similar in terms of property, etc., you can actually use that data to help customers make informed decisions. At the same time, it's also about traffic. It's about how do buyers engage with properties? What do they want to see? What do they need to see? It's not about fooling them. It's about giving them the information they need to make a decision and not go to 100 viewings and be disappointed by 95 of them. So there's a lot of kind of misinformation in the market that I think is much easier to help with when you utilize a big data warehouse and not your first-hand experience from the past 30 years. And I think that's a key difference. And it's also something that is hard for an individual agent, as good as that person may be. It's always hard to bridge that gap. And I think that's something that we're trying to build and that will in the end make our service worth the money that people have to pay for it.
Yeah. I'm wishing you best of luck, you and the
Thank
team,
you.
obviously, for building that. I will follow you closely. And thanks a lot for your time. It was super interesting, super insightful. And yeah.
Thank you very much for having me.
Happy holiday season, I would say.
You too.
So, wir sind jetzt auch schon wieder am Ende des Podcasts angekommen. Ich hoffe, dir hat diese Episode gefallen. Wenn du Hilfe brauchst bei irgendwelchen Kapitalmarktthemen oder digitalen Investor Relations Themen, dann melde dich gerne unter unicornconsulting.com und buch dir einen ersten freien Consulting Call. Wir würden uns ebenfalls darüber freuen, wenn du uns auf Social Media folgst, zum Beispiel YouTube, TikTok, Instagram oder auch LinkedIn, oder wenn du einfach einen Like da lässt. Ich wünsche euch alles Gute und bis zum nächsten Mal. Eure Julia. Ciao.